Back with Midcap Masala, and as promised before the break, let's dive straight into the conversation with the management of Bajel Projects. We've got Mr. Rajesh Ganesh, the MD and CEO of the company, joining us on the show. Mr. Ganesh, hi, morning, and thanks so much for your time. So much to talk about in terms of your FY27 guidance, the outlook for the years to come, the order book. But first, let's start by talking about your most recent order win. About a week or so ago, you've informed the exchanges that you've received an order from a data center client, and this order is between 300 and 400 crore rupees. Talk to us about how the order book is shaping up in the data center segment, and what is the momentum over there? What kind of growth opportunities are you looking after when it comes to this particular segment?
Yeah, well, good morning to you, and thank you for having me on your show. Yeah, we're quite excited about this one. It's a conscious strategy that we've adopted to pivot our business away from power distribution to other areas, such as data center, among other things. And that's it's playing out. But this is an order for 400 220 GIS. We're working only in the EHV space of the data center because that's our core competence. We've not taken any work in the MEP or the building management systems or HVAC yet. So this area, it's a GIS substation, typical for data center, and we're quite excited about this one.
Mr. Ganesh, what is the order book position currently?
Well, end of last financial year, we were a shade bit south of 3,500 crores. But the good news is that in the first 2 months of this financial year, we've clocked in excess of 1,400 crores. So that's a good sign. We are L1 in roughly under 2,000 crores. We are L1, and our bid pipeline is about 20,000 crores. So we're quite hopeful that we should be able to stack up a reasonably good order book this year.
Sounds good, Mr. Ganesh. All the other segments that you were talking about when it comes to data centers, HVAC, for example, and the word you've used, yet, I'm excited to know what is the plan in terms of foraying into all of these other segments when it comes to data centers, and how quickly do you think you'll be exploring all of these segments? Any timeline if you can help us with?
Well, I mean, the mantra for us really is executability and profitability. I mean, that's really the mantra for us. So we're looking at these areas closely, and we're sizing them up. We're looking for partnerships in those areas, and if we manage to get all of these things going, and if we are confident about our execution capabilities, then I can't give you, unfortunately, a timeline for any of these things yet, because they're still in the woodworks.
You also spoke about pivoting into these businesses. How much do these businesses, data center in particular, generate for you at this point in time, or what is the aim going forward?
Well, right now they're very small. For us, this is our second major order in the data center space, and we're working on a few more in terms of pipeline this year. Right now, it's very, very small, but we're quite hopeful that it should come to at least 10%, say in about 3 to 4 years from now, of the revenue at that point in time.
Okay, sounding good. Mr. Ganesh, I was just going through your con call highlights, and the commentary in the con call, you did mention that you are in the L1 stage for projects worth about 2,000 crore rupees and actively looking at opportunities over 22,000 crore rupees. Can you give us an update since then? What has this number been? How much has the conversion been so far?
Well, it's not, the needle has not moved much from what, I mean, the con call was last week, so the needle has not moved much from then. We're waiting for these L1 orders to or L1 positions to fructify into orders. So we're quite hopeful. I mean, here these are places where we are supporting large clients who are participating in TBCB bids. So they need to win the bid in order for that order to come to us, and that's what we're waiting for.
Mr. Ganesh, I believe you have also won some orders from the Middle Eastern and African region over the last few months. Are these more margin accretive as compared to domestic opportunities?
They are. International orders tend to be better in margins and more fairer on contract terms also. Um, but given the heavy sort of geopolitical challenges that we are facing, especially in the Middle East, one has to wait and see how this plays out. But the order that we have received is in the Middle East, North Africa region. It's shared bit north of 400 crores, and we've also gone into we've also found a very good partner for ourselves in Saudi Arabia. We've have a JV that's set up there. We're in the process of getting ourselves registered with SEC amongst other things. So we should be up and running there as well pretty quickly. But all of this has to be seen in the light of the geopolitical challenges and the pressure that it's putting on supply chain around the world, but particularly in that area. But that's an area of key focus for us going forward.
Absolutely. In fact, Mr. Ganesh, I was just looking at the performance in quarter four, and given everything that's happening geopolitically, you've gone ahead and found yourself a partner in Saudi, like you were just talking about. So I was actually wondering about the kind of timeline, given that everything is happening. But that sounds optimistic. I just want to try and understand about the distribution transformers. You've installed about 5,000, slightly more than that in the quarter gone by. What's the outlook for this segment of your business?
Well, I mean, like I said, we're pivoting away from the distribution business. So what we're doing now is really catering to the orders that we have already. We are not in the manufacturing of these transformers. We are mostly in sourcing them and setting them up in order to fulfill our obligation to our clients. So we don't have any intentions of getting into manufacturing of transformers at this stage.
You did tell us about your revenue outlook, that you're looking at about 15% plus growth on the revenue on the top line front for FY27. But what beyond FY27? Do you have any order book visibility, revenue visibility beyond FY27?
Well, I mean, it's a bit early for FY27 itself, if you ask me honestly, because of all the uncertainties that are that's surrounding us. Commodities are having a bit of a run, and things are a little bit choppy. So I think my sort of mental model at this stage is put our heads down and try to navigate as best as we can in this uncertain environment. Given given that we're quite optimistic that we should be able to continue the growth and the forecast that I've given it at the analyst call.
Mr. Ganesh, lastly, now that we're looking at so many orders and conversions to play out in FY27, can you talk to us about your CapEx plans? 170 crore is the number that you're looking in terms of CapEx. Can you help us understand how this is going to be funded? Any fundraising on the cards at all?
Well, so that's that. I'll answer it in two parts, if that's all right with you. One, I'll talk about the capex. So the capex is being spent at our plant in Ranjangaon, that's just outside Pune. And what we're doing there is we're expanding our facility to manufacture towers and monopoles. So that's a big part of that is going to be done by the end of this financial year, early next financial year. And the funding of it is we've taken on some debt in order to fund that, a small, but a big portion will be through our own accrual. So that's that's I think the sorry, what was the second question again?
No, I just wanted to understand how you're going to be looking to fund this capex. Any fundraising at all on the card?
Fundraising, right,
Yeah.
fundraising, yes. So well, we did put out our intent for fundraising. At the moment, we are quite all right. Cash flow is quite strong, but given our aspiration for growth and the amount of the amount of cost that we need to take out from supply chain, particularly in order to make us more competitive, it will be inevitable that we look for fundraising, but we'll come to the market at the appropriate time.
So Ganesh, one last quick question. How much will
Sure.
capacity increase by consequently, and how will it help you operationally going forward?
Yeah, well, at the moment, our plant capacity is sort of shared north of 40 to 45,000 metric tons per annum. And with this capex going in, it should bring it to about 110, 120,000 metric tons per annum. So that will actually put us in a pretty good position to outsource quite a bit of our own requirements, given the increase in demand in the sector in itself. So it's a good increase, but we'll be looking to increase that capacity further, for which capital raise may be inevitable.
That will bring your cost down inevitably going ahead, right, Mr. Ganesh?
Correct. Correct. That's
Absolutely.
correct. I mean, a big part of enhancing that supply chain is to bring our costs down. I mean, that's the big
Understood.
goal here.
Understood. On that note, Mr. Ganesh, we'll let you go. Thank you so much for your time. It's been a wonderful conversation and good luck for the quarters to come. Thanks so much.
Thank you very much. Thank you very much. Good day to you.
Good day as well. Okay, viewers, on that note, we're completely timed out on this edition of Midcap Masala. From Ashesha, me and the team that put this show together, thanks so much for tuning in. But stay on to ET Now, because Buy Now, Sell Now takes all the action.